Jensen, just one more quick last question. I'm glad you talked about
Yeah.
the auto business and what you're seeing there. You mentioned that automotive is now the largest vertical, enterprise vertical within data center. You talked about the Tesla business, but what is that all about? Is it self-driving among other automakers too? Are there other functions that automakers are using within data center? Help us understand that a little bit better.
Well, Tesla is far ahead in self-driving cars. But every single car someday will have to have autonomous capability. It's safer, it's more convenient, it's more fun to drive. And in order to do that, it is now very well known, very well understood, that learning from video directly is the most effective way to train these models. We used to train based on images that are labeled. We would say, this is a car, this is a car, this is a sign, this is a road, and we would label that manually. It's incredible. And now we just put video right into the car and let the car figure it out by itself. And this technology is very similar to the technology of large language models, but it requires just an enormous training facility. And the reason for that is because the data rate of video, the amount of data of video is so high.
Tesla recently received high praise from the US tech giant Nvidia as Nvidia's CEO, Jensen Huang, told reporters in a Yahoo Finance interview that what Tesla is doing with autonomous driving is incredible as Tesla continues to push forward with developing its full self-driving capabilities. So, in today's video, we're going to find out why Jensen Huang has a positive outlook on Tesla's autonomous driving and dive deep into a new vehicle safety report that Tesla released, which showcases astonishing results for the EV maker. Additionally, we will discover the reason behind Tesla's recent decision to diversify its supply chain and manufacturing, and answer the common question between investors right now, which is whether Tesla can rebound or not. But first, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you do not want to miss the newest market updates. Now, back to the video.
I mean, Nvidia is perhaps one of the biggest bellwethers for the market right now, but Jensen also having some high praise for Tesla there.
Hey guys, good morning. Yeah, he is clearly bullish on Tesla's approach to self-driving cars and just their entire business model, which, many people, including many investors are. I would raise a little bit more skepticism. I think while many cars will have self-driving capability at some point in the future, I think what we've seen is consumers have been slow to adapt to it, even slower than perhaps embracing EVs and hybrids. I think there's some pretty, significant skepticism in the market for autonomous vehicles. I think there's going to be a significant learning curve.
And Greg, talk to us a little bit more about that, just in terms of when we talk about AI in the auto industry, what is a more realistic viewpoint then, I guess, from your perspective? And then ultimately, as we take a longer term approach, what you think that growth and demand is going to look like for some of these chips that obviously are necessary in order to, are critical for these automakers' AI goals?
Yeah, I think that's a great question. I look at it more of like a 5 to 10 year sort of time frame where we'll see these chips and then the technologies that they can power phased into different vehicles. And I think you'll see existing autonomous driving systems like Tesla's full self-driving, as well as other programs like General Motors has a feature called Super Cruise. I think you'll see those systems get increasingly more powerful. And then you'll see some of the features that are a little more basic, things like lane keeping assist, blind spot monitoring, automatic braking. Those features that are a little more like tertiary, but still important, get more powerful and more helpful to the consumer. And I think it'll be a longer runway. I think listening to the comments there, that's a very bullish view. And I don't necessarily think that's going to happen in the near term.
While it might be true that there's some skepticism from consumers when it comes to fully autonomous cars, this doesn't change the fact that all cars will have fully autonomous self-driving one day, just like Jensen Huang and Elon Musk believe. Nvidia's chief financial officer, Colette Kress, also said that Nvidia boosted Tesla's expansion of its AI training cluster to 35,000 H100 GPUs, which led to a significant performance boost for the electric vehicle giant's latest autonomous driving software. According to Kress, Tesla's use of Nvidia's AI infrastructure paved the way for the breakthrough performance of Tesla's FSD version 12, their latest autonomous driving software based on vision. Back in August 2023, Tesla deployed a 10,000-unit Nvidia H100 GPU cluster to expedite the training of its full self-driving technology, and at the time, Elon said that the H100 is 3 times faster than a 100 in their tests. Also, last month, it was reported that Tesla plans to ramp up its AI developments by installing 85,000 Nvidia H100 chips by the end of this year, since these chips play a crucial role in Elon's AI endeavors, encompassing the creation of sophisticated robots such as the Optimus bot and robotaxis, as well as the Dojo supercomputer. So, given that Nvidia is going to start offering its new Blackwell chips this year, which are the company's most powerful chips for AI, Elon is definitely going to double down on them. And the reason behind this is obvious, since Elon previously said that the Hopper chips were faster than Ampere chips, and given that the long-awaited Blackwell chips are able to be up to 2.5 times faster when it comes to training AI models and up to 5 times faster in inference, Tesla will definitely go for the new chips to speed up the process of training the FSD software and improve it immensely overall. With that being said, Tesla is going to definitely report even better vehicle safety results with the new Blackwell chips than the already fabulous report for Q1 2024. So, let's go ahead and break down this report and discover how this report sets Tesla's FSD apart and ahead of all other autonomous driving softwares. Hello everyone, and welcome back to Investocracy. Tesla has released its Q1 2024 vehicle safety report, which includes data on crashes involving Tesla vehicles, both when autopilot was engaged and when the advanced driver assist system was disabled. As could be seen in the electric vehicle maker's data, Tesla saw an autopilot crash significantly less than vehicles that did not have the system engaged. The company reported that they recorded 1 crash for every 7.63 million miles driven in which drivers were using autopilot technology. On the other hand, for drivers who were not using autopilot technology, they recorded 1 crash for every 955,000 miles driven. This shows that autonomous driving is the future for humanity, as Jensen put it in the interview, where we will have almost 0 accidents, resulting in no loss of lives. Now, with these very impressive results from Tesla's autopilot, imagine what the incoming improvements to the software will do in autonomous driving. And as Tesla solidifies its position as the full self-driving market leader, it's set to benefit greatly. In fact, this market is projected to grow from $1.9 trillion in 2023 to $13.6 trillion by 2030, exhibiting a compound annual growth rate of 32.3% during the forecast period. So, it is safe to say that Tesla will have the largest piece of the pie, given that its self-driving software is ahead of other technologies, and this will likely be made clear in August when robotaxis are showcased in China. But despite this, according to a report from Nikkei, Tesla is requesting its suppliers to begin manufacturing components and parts outside of China and Taiwan as early as 2025. So, let's find out why. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
All right, we got Tesla cutting production. We need to take us through the story.
Applauding this today because the company is finally addressing that weakening demand that we've seen for several quarters that it didn't seem like the company wanted to admit about, certainly not Elon Musk. But right now they're addressing the demand that's weakening for the Model Y. Tesla's reportedly planning to cut the Model Y production at its biggest manufacturing hub globally. That's the Shanghai plant. They're planning to cut production by at least 20% during the March to June June quarter at that plant. And industry data backs up that this is likely in the works already, because the China Association of Automobile Manufacturers showed that the Model Y output in China was at around 49,500, very close to that number in March. That was about 18% lower, right? And then in April, it came in about 33% lower. Now, we're not sure if the output cut will extend into the second half of this year, but we know that Tesla still plans on selling up to 700,000 vehicles in China in total this full year. So they haven't adjusted that full year outlook for the output yet, right? And they're also planning on selling 2 million EVs globally this year. We haven't heard anything telling us anything otherwise right now. And of course, as I said, it's addressing the weakening demand. Why has this been happening? Because it's been a brutal price war in China happening among the 300 or so EV makers. We know that the government has been trying to consolidate them, but all of these EV makers are flooding the market with cheap vehicles, and it makes it difficult for Tesla to still maintain its priority position, even though it's still up there and it still has the largest, but they've got a lot of different vehicle makers coming for Tesla's market share. Now, meanwhile, Tesla did also release its latest impact report yesterday, and what was noticeably missing, Oliver, was the goal of delivering 20 million vehicles per year by the year 2030. That's a tall order right now, because Tesla hasn't even broken 1 million yet. And so this is just something that'll continue to be on our radar, and the year 2030 is really closer than we think.
According to the Nikkei report, which cited sources from Tesla's supply chain, especially suppliers of printed circuit boards, panels, and electronic controllers for models sold outside of China, suppliers have recently received requests from Tesla to avoid China and Taiwan. And the reason behind this is the increasing geopolitical risks in the Greater China region prior to the US presidential election. Similarly, the report also indicated that other American car manufacturers, such as General Motors and Ford, are also instructing their suppliers to explore relocating their production lines away from China and Taiwan. However, Tesla's operations in China will likely not be affected by the rising tensions between the two countries. The company is comfortably building a mega factory in Shanghai, and robotaxis will be tested in China first. The truth is, China definitely values the presence of Tesla and encourages the company to invest more in the country, so Tesla investors shouldn't be too worried about Tesla in China. Now let's talk about the outlook for Tesla stock and whether we should expect a stock rebound soon.
Tesla's moving this morning, and I don't see a lot of stories, but there is one that Li Auto's moving a little slow on their SUV, their electric SUVs. So I don't know if that will pave any room for the Cybertruck to take off in China. Are they going to sell it over there? How does that going to work, Garrett?
Yeah, that's a good question. Tesla, it's not for the faint of heart. We thought their Q1 earnings release was much better than expected. The stock has rebounded off the lows, but still, down almost 30% year to date, coming off a year in which the stock more than doubled. Looking ahead, we really like the detail they provided as far as AI investments and improvements in full self-driving software. We think that's going to be a key part of the story going forward. And looking forward to the Robotaxi Day that they're holding in early August. That's what we're really looking at here with this story over the near term.
Okay. And Tesla right now, 180. So if what needs to go right here, Garrett, to get it to where you want to be, do you need to have like big macro uplift in the economy again? Because some of it seems like they've just been stuck between a rock and a hard place, a little less EV demand and then a little more pinched consumer.
That's right. And I think, the year-to-date decline in the stock also reflects the difficulties they've had ramping up the Cybertruck so far. So I think, if they show better progress, ramping deliveries, they ramp up production of the Cybertruck, which we think they will do over the next few quarters. That's really going to restore investor confidence in the story. And also, providing detail regarding full self-driving, the AI investments that they continue to make, how that is going to translate to earnings. Obviously, the more full self-driving subscriptions they sell, it's going to be very positive for their margins because it's software sales, not auto manufacturing, which inherently is low margin.
Have plummeted significantly in 2024. As of the time of the video, from a valuation perspective, Tesla trades at around 63.3 times forward earnings. Now, while this is way higher than Chinese EV companies like BYD and Li Auto, investors may see this loss of share value as a buying opportunity. And they might not be incorrect, in spite of all the apparent market headwinds, as Tesla has demonstrated the ability to rebound when shares have taken a significant beating. In fact, in 2022, Tesla shares fell 65% as many investors sought to decrease their exposure to technology and emerging sectors equities. However, by the end of 2023, Tesla shares more than doubled in value. All in all, while Tesla shares have severely underperformed the market, there are high chances that the EV maker could rebound, which makes the current price at around $179 a great opportunity to enter now before the next Tesla catalyst, which will be the robotaxi reveal in August, and that will definitely send the stock much higher. But what do you think about Tesla stock? And what are your expectations for the robotaxi event? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Tesla is. If you would like to know more about the latest updates about companies like Tesla, then go ahead and click on the next video on your screen.